Hello and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and this is Trading Places Live. It's Tuesday, November 1st, 2022, and I'm pre-recording this Trading Places Live for a bit later this morning. Currently, we have futures that are up, so didn't have a great day yesterday. We'll go over that in just a minute, but currently, futures are a little bit up this morning. We got Dow futures up 182 points. S&P 500 futures up 33. We should be up challenging that 3,900 level again at the opening bell. And the NASDAQ futures are up about 128 points. So it looks like we're going to get off to a pretty decent start. Crude oil prices up $1 to 87.60 per barrel. That's 1.2%. And the U.S. 10-year Treasury yield down 14 basis points this morning, 3.94%. Of course, the Fed meeting will get kicked in, or will kick in today. We'll have our policy statement on Wednesday at about 2 p.m. Eastern. And I think the market's bracing for another 75-point rate hike, 75 basis point rate hike. And I think all eyes will be on the statement that the Fed has as far as their policy going forward. What's the wording? Anything changed? Have they seen results from all their hikes? Any idea of what they're going to do in December at the next meeting? Is it going to be 50? Is it going to be 75? All of those things I think traders will be watching for and will take their cue from. But I do think the green futures today have a lot to do with a 10-year Treasury yield down 14 basis points this morning. Let's take a look at what we're going to go over today. We'll go through the agenda. We'll start off with the daily market recap, and then talking technically. Seasonality going into November. I'll talk a little bit about some things maybe to watch for there. The earnings spotlight and 3 you must see. Before we get into any of that, let me take you over to Earnings Beats, where you will see, if you go to earningsbeats.com, we have a huge event coming up on Saturday, 10 a.m. Eastern. It's a live virtual event. It is free, but you must register. So it's understanding market manipulation. Talked about this a lot throughout 2022. I can tell you right now from everything I'm seeing, Wall Street is accumulating. And when I say Wall Street, I mean the Wall Street firms, the big money. There's a lot of accumulation that's been taking place over the summer months. While we went down to that June low, from the May low to June low, I saw a lot of rotation, and that rotation has continued, maybe even accelerated over the last few months, even as we went to print a slightly lower low late this summer. So I think this is going to be a big event for folks to really open their eyes and see what is taking place in the market, not just from the rotational standpoint, but also from the calendar. You need to understand the different times of the month and what works, what doesn't work, why it works. There are a lot of different strategies I think that you can apply or at least be aware of in your trading to help you make more money. And I think that's what we're all in this for. Anyhow, Saturday, understanding market manipulation. You need to register. Make sure you go to earningsbeats.com, hit that register now button, and make sure you're signed up. We do have limited capacity for this event, so you want to make sure that you are signed up there. If you can't make Saturday, by the way, it's okay. We have a recording. So if you sign up, we'll make sure you get a copy of the recording. If you scroll down a little bit further, of course, we have our free newsletter. That's our Earnings Beats Digest newsletter. Comes out 3 times a week, Mondays, Wednesdays, Fridays. Normally out by about 8:30 in the morning. We try to get it out about an hour if we can before the market opens. All this takes a name and an email address. Hit the subscribe button. There's no credit card required. You can unsubscribe at any time. I focus a lot on relative strength. Of course, earnings, gaps, candlesticks, price volume, trend lines, moving averages, a lot of the basic technical analysis tools that many of us use. But I do use them in concert with one another. So if you want to check that out, again, that's a free newsletter. Just hit that subscribe button with your name and email address. All right, moving on, daily market recap. What the heck happened on Monday? Well, first of all, it was Halloween. We ended October. It was the strongest Dow. You can see this huge move on the Dow. It was the strongest monthly move on the Dow since 1976. That's going back 46 years. That's a long time. 46 years, 12 months a year. this was the strongest one for the Dow going back that far. Pretty amazing. S&P, NASDAQ, also strong in October, but not nearly as strong. In fact, the NASDAQ with the rates moving up earlier in the month, I think that's had somewhat of an impact. Yeah, I think the large multinationals that we see on the Dow Jones, that's where the money's been going on a rotating basis. I mean, it's been straight up. But again, S&P, even though it was down 29 yesterday, still trading above its 20-day moving average. The NASDAQ, which was a little rougher, down over 1% yesterday, did still finish up about 84 points above its 20-day moving average. And with futures green, it looks like we're going to stay there, at least at the open. Mid caps, we actually lost 2 points, so relatively flat. Same thing with small caps, down about 1.25 point. And then moving on to the sectors. Energy was our strongest group, up about 0.8%. Nice move up to $90. You can see comfortably now above the 20 and the 50. That's a nice configuration again on energy. Prices above the 20 above the 50. Everything moving higher, including the PPO, the AD line. Everything looks strong in energy right now. Communication services, not exactly looking strong. Down the most on Monday, down 1 2/3%. Back down not too far from the recent low. Meta having a lot of problems keeping the internet stocks down and also holding down communication services. Technology, which had been strengthening a little bit, got up to the 50-day moving average, down 1.3% on Monday. Utilities down almost 1%. Materials down 0.9%. 10-year Treasury yield. Okay, so Fed meeting starting today, ending tomorrow, 2 p.m. Eastern. You can see we bounced off the 20-day. Everything looked like, hey, here we go back to the upside. And after breaking that losing streak on the yield to the downside, we broke that yesterday. You can see the yield was up 7 basis points. I think that had a lot to do with the selling yesterday. But today, as I mentioned, we are down right now 14 basis points to 3.94%. It's not showing yet here on the chart, but it will shortly. That 3.93 takes us comfortably below the 20-day moving average, which is at 3.97. So you're talking about being about 4 basis points beneath it. We'll see where we open in just a bit on the 10-year Treasury yield, but at least looking ahead, it does look like we are going to open below that 20-day. And if we do, that'll be the first candle body that we have seen below the 20-day since back in early August. And of course, that was when we ended the last run to the upside. So the market would like a little reprieve from these higher rates. And this morning we're getting it. And as a result, we're seeing the yields up. Or excuse me, the market's up. Let's see, what else do we have coming up this week? Well, we've got the ADP employment report out tomorrow. And then we've got the October non-farm payrolls due out on Friday. The September non-farm payrolls came in at 263,000. We're expecting October to fall back to 210,000. I think the stock market would love to see a number that's a little bit less than that, but still positive, because I think everyone's hoping for the Goldilocks scenario here, that the Fed's going to stop raising and we're still going to have a soft landing. Prices, inflation going to come down, but we're not going to have to kill the economy to do it. That's the hope. So I think a slightly disappointing non-farm payrolls report, I think, would be good for the market. Ordinarily I'd say, hey, let's beat the number. But I think with the Fed worried still about demand versus supply, I think if we show a strong number, my guess is they're going to remain pretty adamant as far as their rate hikes go. So that's what I'm looking for. We'll see what happens later this week. Moving on, let's do a little talking technically here. S&P 500. We moved through the 50-day moving average back on Friday. Really strong day. It was a trend day where we basically went up all day long. We've seen a number of these days now over the course of the last 2 to 3 weeks. I mean, if you go back, even beginning of October, we had 2 solid hollow candles. There was a huge one. Remember, that was when the CPI report came out. We gapped down big, and then we had buying all day long. But in the last I don't know, 7 days, we've seen 4 really solid hollow candles, very tiny red filled candles back to the downside. So it certainly looks like the market's being accumulated here. The accumulation distribution still pretty strong considering how far we've dropped all year. Wouldn't take much for us to be back at an all-time high. So overall, I think we're looking pretty good here on the S&P. Now, back when we did move down in the second week of October, you can see we had lower lows established and higher PPO. That's a positive divergence. I look for a 50-period test. We got that. We've gotten the center line test on the PPO. Once we get there, new ball game. Are we going to break above, and start trending higher? Are we going to just roll over and go back to back down to the lows? I don't know. I mean, we saw back in May, June what happened. Came down here, had maybe a slight positive divergence, went back up close to the center line, close to the 50-day. We rolled over and went to a new low. Didn't really we had a slight positive divergence in here. We ended up going through the 50-day temporarily and then right back down. So watch that rising 20-day. As long as we stay above that 20-day and price actions above the 20 and the 20 hopefully crosses back up above the 50, that would be a bullish configuration. So we're almost there on the daily chart. Let's keep watching that. The weekly, though, shows us a positive divergence from a longer term standpoint, which can have a much, much more significant impact to the upside. Here we've got lower prices, higher PPO, normally 50-period test. Where is that? 4,200 almost. 4,185 right now, 50-day moving average. So 3,900 is our daily price resistance that we have to look at. That's where a lot of these rallies have failed. And when we were coming down, that's where a lot of these declines stalled. Right at 3,900, there was gap resistance right here. When we gapped down below 3,900, failed at 39. You can see all these different 3,900 tests. Well, it looks like today, if futures hold up, we could be back up above 3,900. Do we hold? I mean, look, here we went through the 20, got just above 3,900 and right back down again. So there's no guarantee just because we're trading early in the day above 3,900 that we're going to stick there. This is a key area, pivot area that we've seen throughout 2022. And so I would definitely keep an eye on it. The further we can get above that number, the more bullish I become. And again, with that weekly positive divergence in play, we could be looking for a move up closer to 4,200 on the S&P 500. NASDAQ, not quite as strong, although I do see a nice bottoming head and shoulder here off of this recent move lower. Can see all the way down here. Right here would be your left shoulder. Neckline back up above 11,500. One more move lower puts in the inverse head. Also, the lower lows come with a higher PPO. I like these bottoming head and shoulder patterns with positive divergences. I think these are just a little bit more corroborating evidence that maybe a bottom is in. We need the breakout, though. Doesn't confirm until you take out the neckline. This move up over the past couple of weeks went back up, established the right side of the neckline, pulled back. This is the right shoulder. A breakout above the neckline also clears the 50-day moving average. That could be a very, very bullish move. Watch for it. As far as the weekly chart here goes, lower prices, higher PPO. That means 20-period moving average isn't necessarily going to hold this time. We could see the 50. The 50 right now is up at 13,300. That's 1,900 points away from where we closed yesterday on the NASDAQ 100. That's 19. I mean, we're talking about 17% move potentially just to iron out this positive divergence. Transports. I think transports are strengthening. This is a good sign. See all the lows down here around 13,000 just beneath? Here was the big gap down. We had a little rally just above 13,000. So this, I'm going to call it 12.9 to about 13.1, was pretty big resistance. We failed here. We failed here. And then with some pretty solid volume, we went right through. So not only are we seeing a big move in the Dow Jones Industrial Average, biggest since 1976, biggest monthly increase, but we're getting a little bit of positive news or positive price action finally in transports. PPOs turned positive. AD line remains strong. Now the price action is starting to turn bullish. Things are looking better for sure. Banks, another area I think is pretty key, breaking back up above the 20-day moving average, above this earlier October high, above the 50-day moving average, came back down, tested the 20, and went to a new high. That's a signal of an uptrend beginning. Lower prices, higher PPO, positive divergence. These positive divergences can be very, very strong, very powerful. If we look at the weekly on the banks, lower price, very, very nice divergence here. We're back through the 20. A 50-week test would be up at 509. Look at the recent highs, right at about that same area. 509 from where we are right now would be about an 8% move, 7 to 8% to the upside in the banks. Things are looking better. All right, let's move on to seasonality. So every month I send a report out to our members at Earnings Beats, and I just provide a lot of historical information, a lot of seasonality, things to be aware of about the month. And in November, I can tell you, it is the strongest calendar month of the year for the S&P 500 since 1950. Its annual or annualized return for November since 1950, the annualized return over 19%. The S&P 500 has an average annual return of about 9% going back over those same 72 years. So November's action historically is twice as bullish as just the typical S&P 500 throughout the year. November is a very strong month, followed closely by December, which is coming up next, and then April. Those are your three top months on the S&P 500. So anyhow, that's good to know. Also, I want to point out that if we pull up seasonality and you pull up the XLI, which is industrials, I want you to watch this November. You can see over the last 5 years, November has averaged 5.2%. Watch as I drag this back every year. This is telling you how often the XLI has gone up. Now, if you think about it mathematically, last 5 years, how do you get 75%? That's 3.5 years. Well, we haven't had November yet in 2022. So this is just 4 years. So that means it's gone up 3 of the last 4 years, which is 75%. Now watch as I drag this back each year. We go back 6 years, now it's 4 out of 5. 7 years, 5 out of 6, and so on. Watch as I keep going back 8 years, 9 years, 10 years, 11 years, 12 years, 13 years, 14 years, 12 of the last 13 years, industrials have been higher in the month of November. Again, think about these transports, what these transports are starting to do. Transports are a big part of the industrials. Look at the industrials relative to the S&P 500. Once again, 3 of the last 4 years, industrials have outperformed the S&P 500 by an average of 1.4%. Let's drag this back now. 6, 7. Watch that. Watch this bar going up. Every year I drag this back. 9, 10, 11, 12, 13, 14. 13 of the last 14 years. Or excuse me, 12 of the last 13 years, because we don't have this year's November yet. 12 of the last 13 years, industrials have outperformed the S&P 500 during the month of November. This is one of the strongest seasonal trends that I'm aware of. Industrials love the month of November. Industrials also are looking really good on the chart. If you look here, look at this breakout here in October, well above the 20, which is about to cross the 50. Look at the PPO, AD line. We're way below in price from where we were at the beginning of the year. The AD line's ready to set a new high. There's been accumulation. Look at this big drop right here. You can't drop 45 days like that and go sideways in your AD line without some kind of manipulation taking place. If you go back and you look, when we've had bigger volume, we've had recoveries, or we've had solid days where we finished near the highs of the day. A lot of the days where we have seen big moves to the downside, we haven't really seen a lot of volume. Remember, volume is a multiplier for the AD line. So I'm still seeing, I mean, when you look at where we were at the end of September, lower lows on the XLI, look at where the AD line went. It went up during that period. Telling you, Wall Street firms are accumulating while everyone in the media is telling us how bad things are. Wait until these rates start to drop. Like today, we're going to have a massive rally ahead. It's coming. Also in seasonality, what I do is, in addition to pointing out sectors and how the market trades throughout the month, that sort of thing, also give 20 stocks that have seasonally strong track records during the month of November. I'll show you two of them. One of them is Hawaiian Holdings, which is an airline, HA. I pulled this up over the last 20 years. First of all, you can see the average return during the month of November over the last 20 years, 14%. It's been up about 3/4 of November's. The average, very, very strong. The other thing I noticed on this chart, look at, if you add all of this coming across to July, if you add the average return from January to July, you will get, I believe it was minus 0.5. So essentially the first 7 months of the year over the last 20 years have been flat for this stock. The last 5 months of the year, it's averaged going up 28.5%. That's and look at the percentage chance of each of these months moving higher. The highest is 60%. 4 of them are below 50%. Then you look at these 5 months, and the lowest is 58%. 4 of the 5 are at least 60%. And look at the average returns. I don't know why, but there's a light switch turned on in the month of August for Hawaiian Holdings. And if I look at the price chart right now, been going down. I mean, here was your January to July period right here, down again. Now we've been going from the end of July to where we are now. We're about maybe just slightly below, but look at the volume and the pickup up here. We've pulled back. Now we're starting to rally again. This is one that I could see really starting to move in the month of November. Like to get back up through the moving averages, but I love that volume and that move up and then going back down, basically filling this gap. And now I think we could be ready to turn back to the upside. That's one to keep an eye on. Another, this one I thought was very interesting. This is Parker Hannifin in the industrial machinery area. Notice the November, 95% of the last 20 years. Well, 19 years. So that's 18 out of 19 years. PH has gained ground during the month of November. It's pretty strong. Average gain 6.2%, which is the largest of all the months. And look at October and November. Just the 2 months combined, 11% average. Nothing else on the really, you got a good April. Other than that, there's nothing even close to these 2 months. So what's the chart look like? Well, there's your October taking off again as usual. And now we've got November coming up. Now, this one's a little overbought. It's above the 20, but any kind of a pullback during November, to me, would seem like a pretty good opportunity on Parker Hannifin, given that history. All right, let's talk a little bit about earnings. Moving on. So lots of earnings. They're really going to pick up here over the next few days. This is the heaviest volume week of earnings. I think over 600 companies report on Thursday. Just Thursday alone. So we got a lot of companies that are going to be reporting. But let's take a look at some of them that reported last night after the close and then this morning. Stryker is the first one. I'm going to pull up the symbol summary so we can see in the pre-market what's going on. Stryker down $12, down 5.4%. You can see on the chart, hit resistance, hit the 200-day moving average, down $12 to 216, all the way back down to about the 50-day moving average and near trend line support right here. I don't know how the numbers came out, but if the numbers were fairly decent, and when I say decent, I mean, did they beat? revenues and earnings per share? If so, this could simply be a buy on rumor, sell on news kind of event. And down near trend line support, this could be a nice buy on the open. Again, I haven't looked to see what the numbers are, but this is the type of thing that I like. If we get a gap down, instead of panicking and selling, I'm looking to buy these stocks, especially given what I believe is going to be a very strong end of the year. So I think some of these could be presenting opportunities. AFL, this is the Aflac life insurance, down 1%. It's been up. So any kind of a pullback again down near that 20-day would be interesting for me there. NXPI, big semiconductor, here up 1.7%, 148. Really needs to negotiate that 50-day up near 155. Let's see, what else do we have? How about HOLX? This is a medical supply company, up $5 today to 73, all the way up to here. And that's 7.6%. Watch this overhead resistance, see if we can get through 74. Lattice Semiconductor. Lattice right now is up 4.5%. So another semiconductor with a decent response. That's good. Trying to see if there are any others. AMKR, it's another, this is actually one of the leading semiconductors, and it is up almost 5%. But look at a semiconductor doing this in the market. Semiconductors have been incredibly weak. AMKR has been a leader. Must have had a pretty decent report, getting a nice reaction. Just be careful. I mean, as it gets up close to this 22, 23 area, I would expect to see just some natural profit taking. Let's see, this morning, what came out? How about Eli Lilly? Down 1%, but this has been a big stock. It's had a great run. Buy on rumor, sell on news. Anything down close to that 20-day, if it does weaken, would be strong. Would be a strong buy for me. PFE, Pfizer, another one in the healthcare space. This went up 3%. Looking pretty good. How about Uber? Uber reporting this morning, up 9%. So 29.01, that's about where it was just a few days ago. We'll see if it can negotiate that level. Let's maybe take a look at one more quickly. Let's see, what else do we have here? How about commercial vehicles have been pretty hot. So how about Wabtec, WAB, in that space? Let's see if we have anything there on this one. No, it's not showing anything. Let's do one other one then. How about the food retailers? Cisco, the other Cisco, it's flat after its earnings. Okay, not really seeing anything else. I'm sure there are plenty of others that are moving. But we got to get to the final three you must see to wrap up the show. So let's start off with Etsy. And Etsy, AD line looks good, but it is threatening some lows, some recent lows. I do believe they're going to be reporting later this week. So be careful with this one. Next up is LPX. Now, this one looks to me like a bottoming head and shoulder. Left shoulder, neckline, head, neckline, right shoulder, breakout. We're going back, looks like testing this area. I think this support from 56.5 down to about 55.50, the 20-day moving average. I think that's where your support is. And the last one is Tilray, TLRY, making a move, trying to break out again. Look at the volume picking up again yesterday. This one looks like it's poised to make a move up to 450. And if it breaks out there, we could definitely see some more movement to the upside. All right, that's it for me today. Everybody have a great rest of your day. We do have a lot of things coming up. Fed meeting, ADP employment report, non-farm payrolls, all up the rest of the week. Watch the 10-year Treasury yield. That's going to be a big clue for the overall market and how far this rally might go. But that's it. Everybody have a great day, and I'll be back tomorrow over at earningsbeats.com. Happy trading, everybody.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.